Time now to spotlight where we expect momentum to come in the market this week. Joining us now is James Demmert, founder and chief investment officer at Main Street Research. James, we are on retail detail this week. Of course, we have President Trump meeting with European leaders. That's the geopolitical front. I think that's expected to affect more energy markets. But let's talk a little bit about the retail expectations. We're going to get a sense of how the consumer is doing this week. We've got Home Depot, that's obviously, will play into what we think about housing. We've got Target, TJX, we've got Walmart coming this week. What are you expecting to hear about the consumer?
Happy Monday, Diane.
Happy Monday.
Yeah, I think these stocks are going to tell us a lot about how the consumer feels and how they're spending. I think it also might tell us a little bit about the labor market, right? We had weak labor market numbers, and that might be the story that you get in these retail earnings. So, I'm really interested to hear on the lower end, the Target numbers. Ross is going to be reporting as well. Walmart's a little bit upper scale now with spend and consumers.
Which is wild.
Isn't it?
Because, a few years ago, that was when you first started seeing the six-figure household start to go to Walmart, and it's been sticky.
Yeah. And, that's our favorite in the group. They've really demonstrated that they can meet or beat expectations. We think they will. I think Target, 11 times earnings, people have kind of thrown that stock out the window. It's a low bar for them to meet. They did do an offshoot of Ulta that's no longer going to be part of their business. So we think, Target, not really that interesting here, but they will, again, these earnings are going to tell us a lot about the consumer, TJX as well. I think that's what investors should focus on. If you're a long-term investor, I think, you could maybe buy Target here as a value play. TJX acts okay, but the whole retail sector has been very difficult. I think Home Depot is really interesting as what it says about the housing market.
So I think that one's an interesting one too. When you think about the state of the housing market and the impact of tariffs, I think that one may be something worth paying attention to, not just because of both the consumer, but also the pro side, right?
Yeah, absolutely. And what's interesting is they've really attracting a lot more professional construction business, and that's going to be better for their business. Toll Brothers reports another sort of a mirror there of what's going on in the housing market. What's interesting is those stocks in the last month or two have really accelerated in the upside. I think that's anticipating that the Fed might cut, which is what the housing market really, really needs.
Needs.
But Home Depot typically comes off of like this report pretty good because summer is when people go there, they do some remodeling, they fix the garden. So I think the numbers there will probably meet or beat expectations. And if the Fed can cut, I think that really unleashes the housing stocks to do a lot better. Boy, they've been terrible.
Yeah, they have been. Are you expecting similar for Lowe's with regard to, or different story, since that's more just really the consumer side?
Yeah, it is much more than just the consumer side, but a similar mirror there of what the consumer is doing. Are they spending money confidently? I think that's really important. If they're not, it could sort of validate that the labor market is weak, which again is the invitation for the Fed to cut.
Yeah, it'll be interesting to see because I could see Walmart holding up just because of, one, the shift in patterns, but also, more than 60% of their revenue comes from grocery. So whether you're a higher income or a lower income shopper there, you still have to buy groceries.
Yeah,
right?
It's a consistent business model. It's not as cyclical as these others, which tells you, though, if the consumer comes back big, Walmart might not do quite as well, while these other more cyclical companies like TJX and Ross really sort of catapult off the lows.
I'm curious to know your thoughts about we'll call it the geopolitical wild card. It's not shaking up markets today. There's, conversations about the potential for a peace deal between Ukraine and Russia. You have Ukraine's president, Volodymyr Zelenskyy, in D.C. today, other European leaders. What are you watching, or how closely are you watching geopolitical developments? And if there's a peace deal, could that be another tailwind for the market?
Yeah, we specialize in individual stocks from around the world. So we invest globally. About 40% of our companies that we own are outside the U.S. So we are watching this very, very closely. We think that we're not sure what happens this week, but it probably will be more constructive than it's been. And we're sort of in a trend of more and more constructive talks about peace. And I think that if you got some sort of peace agreement, wow, would that put the fire under what is already a great bull market in Europe. for sure. And I think it would help the U.S. stock market as well. So I think that's a big positive surprise that might come out over the next quarter.
I got to ask you about this hat. The hats are back. So James brought a hat to set Dow 100,000. Obviously, we're not there right now. We're at just below 45,000 right now. I've heard calls for Dow 50,000. Dow 100,000. When do you see that happening?
It sounds like a reach, doesn't it? But we did the math, and we're sort of thinking this is a super cycle of technology, AI-led earnings. And if you look back and you say to yourself, well, at this level, in price earnings included, where could the Dow go over the next, in our view, 5 to 6 years? We think we can get to Dow 100,000, which is more than a double. I know it sounds like a big number.
Yeah.
We think it's very doable as long as it doesn't get derailed by who knows what.
Okay, very, very doable from your perspective, potentially within the next 5 to 6 years. Let me ask you this. This most recent earnings cycle, I know we're not completely done with it yet. You have more than 80% of companies beat expectations. Was the bar lowered this cycle, or was the bar kind of where it needed to be given the previous earnings cycle?
Yeah, it's interesting, right? When the bar is low, it makes those look good, and I think it has been lowered for these companies that just have not performed well, like a Target is a good example. But the bar was raised for technology companies, and boy, they beat on top and bottom line handily. So, and it tells you a lot about this market. It's a market that's led by technology stocks. People want that growth, telecom, AI related. The rest of the market hasn't been doing great.
Okay, all right. Well, I did hear from another voice today that we will see more of the rotation trade. We'll see if the rest of the market starts to pick up some of the heavy lifting that the AI trade has been doing, James. Thank you, James. Appreciate you. It is great to be with you. That's James Demmert, founder and Chief Investment Officer of Main Street Research. Our thanks to James.